Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 8th, the year's 2022. Let's talk trading. How you trade. These videos are for educational purposes only. Your results may differ from mine. How you trade. Well, I had a question from a trader, and they wanted me to explain what I meant by how you trade, because English isn't their first language, and so they're trying to understand what I say. So, how you trade. Well, the first part is it's not what you trade. In other words, you could be trading stocks, you could be trading metals, you could be trading commodities, you could be trading Forex. That's the what you trade. Now, how you trade, that's different. That comes down to your plan, your trading plan, your method, your exit strategy, your money management. All those things make up how you trade. So, for example, one of the first trades I look at for the week is to fill the gap on the weekly open gap. So usually you can see here it closed at 2068 and price opened at 2066. So that's only a 2-pip gap. That's really not that much, but it did fill it. So it kind of gives me a bias. But the reality check is when the market opens on Sunday, the spreads are usually untradeable, meaning they're like 10 pips or 5 pips or 20 pips. And that's just not tradable, in my opinion. So that's one of the ways I trade. The other thing that I'm conscious of is where's that weekly pivot? And so from the open, I would want to fade the pivot. And so my bias would be long because of where that pivot is. So that's another way of trading. So I look at the pivot to determine the bias. How I trade basically are horizontal line crosses. So for example, we're coming up close to the opening range for the month. So if it breaks this line, I'd be looking to go long. Here on the yearly, there's really not much to look at for trading. Now we've got inside bars. Once again, it's a horizontal line trade. I've got it set up here for the daily, weekly, monthly, but you can also do it on the 1-minute chart, the 5-minute chart. And in fact, I actually do that sometimes. This is just showing the range. And part of the how here is, well, you know, price needs the range. In fact, I was trading with Walmart earlier, and at the time, the range was only 76 pips. And we were saying, you know, a lot of times price will go coast to coast during the New York session, but price needed to expand its range. And so it was easier to expand it to the upside than to the downside. And here we've got the buy zone. This is one of the first of the hows do I trade. Knowing that price has to range away from the open, I run statistics, frequency distribution, and it says usually if it gets to open -8 to -10, it'll go to open -50 or more. And then on the other side, if it goes to open +8, +10, it'll go to open +50 or more. And so right now it's close minus open is +65. So that's where that came from. Pure statistical trade. So how I trade, I use statistics, marking horizontal lines, so I know where to enter. But you can trade using squiggly lines, they're crossovers. You can trade off of fundamentals, news reports. So that's what I mean by the how you trade. It's what causes you to enter a trade, what causes you to exit, how you manage your money, how you manage your risk. So the rat trade here, we can see we're in the red rat zone right now. Price is moving up. And so red rats are starting to lick their chops. Range is large enough. All the biases say long. So you just have to wait to get a signal to come back down. And as I mentioned earlier, we look for these pivots to be taken out. So we hit the daily pivot, we hit the weekly, and I'm not sure where the monthly pivot is on this chart. Oh. You can look over here. So we have, okay, that's the H4. We didn't hit it yet. Okay, so we took out the daily, we took out the weekly, and that's right, the monthly was down below. We've taken out the monthly pivot. Another way, or how I trade, once again, it's a horizontal line trade based on statistics. That price doesn't like staying in the wick zone. So you can see here, price moved out of that lower wick zone. Higher low, lower high trades. Right here, you can see it's calling for a short at 31.4 at the moment. And there was a trigger right there live. And so we see what happens. Okay, there's a pip to be had. It put in a 1 ball. So we'll see if it pushes down or if it continues to push up. Pushing down, there's a couple of pips, a couple of more. So right there live. So that's one of the ways how I trade, is I look for these higher lows, lower highs, and taking the break. And you can see price is moving nicely down. You'd be up 5 pips. So that's not bad for less than a minute. Does it always happen that way? No. So there was a nice move. So anybody using the 1 minute rat reversal, bull candle closes, red candle closes, you take the short here at the bottom or the low of that red candle, or you can use the higher low trade. So that's a how trade. That's how. On here, you can see, once again, based on statistics, there's looking at the highest open here. So waiting for price to come back down to 21.20 to go short. We put in a high this hour. So next hour it'd be kind of a 1, 2, 3 trade with the reversal. We're not in the ATR zone. We did cross above the bottom of the right here. Oh no, it's not on this. Those lines aren't here. We crossed the bottom of that wick zone of the candle. We're in the upper rat zone. We're 4 pips above the whole low there, highest open. So lots of opportunities there. And another how, the wall mall method. So right there, there was a long trigger at 21.30, good for about 5 pips. You just have to take those pips when the market gives you the opportunity. So that is really the how part. It's basically your trading plan that you should be able to write on a 3x5 card. Otherwise, it's too complicated, too complex. And those are the rules that you follow to make your entries. So that's the how. And which method you pick doesn't matter, whether it's one of mine, one of your own, or somebody else's. But it's the steps that you take to enter and exit a trade. That's the how you trade. So somebody could be trading the pound dollar. They could be looking at daily charts. Their triggers could be vastly different from mine. They could flip a coin. They could say, well, price has to range, so I think it's going to go long. So I'll just go long. I'll set my stop loss, set my TP, walk away. I mean, that's a how you trade. The market structure, boys and girls in non-binary trades. They'll look at a chart, they'll see what they consider, like for example, right here, they consider this a order block. Price was going down, then it went up. Then like you can see here, they filled in what they would call the imbalance. So they might look for more imbalances to be filled. And so that is how they trade. So there's a lot of different methods out there. But the thing is, you pick one. Hopefully it's simple, something that you can follow, something that's repeatable, and something that shows statistically that you have a positive expectancy. In other words, you have a good chance of winning as opposed to losing. And we're at the top of the hour, so we've got a wall-mall line at 2120 to the south, 2130 to the north. We're 11 pips off the high, 78 off the low, and you just see which way price wants to go. You can see here from the week all down to the day or to the minute, everything's green, and we'll see if this candle changes. One of the things I've been liking to do is look at the M30 and see it put in the upper wick, and we have an open at 22.3. So if price drops, say down to 21, I would look to go short, anticipating a couple of things. One of it, that price will cover this body, because you can see here how many times price covers the body versus it doesn't. And on M30, it's right around 60 to 70% of the time historically. So to me, that's a good trade, good opportunity. So in the past few half hours, this one didn't quite cover, this one covered, this one covered, this one covered. So, fellow traders, I think there's a couple other questions out there. I don't recall them off the top of my head. I think it had to do something with the money management, but I'll go back out and look and I will answer those. So hopefully I've answered that question, how you trade. And if I didn't, just let me know. And I will try to, but ask a more specific question, because I think I've explained it. So if there's something you're still not quite sure of, let me know, and I can go into it in a little more detail or try to be a little more specific. But to me, it makes all the difference in the world, because one of the things that I do is, I pick one pair to trade, where there's some traders out there, they trade multiple pairs. And I used to be one of them, because I'd look at my dashboard and it would tell me where the trades were. So for example here, anything that's red or green in this column or yellow is telling me there's a potential trade on that particular time frame. So fellow traders, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.